Today, I want to talk about how hedge funds and shorts are now turning on each other, stealing secrets and causing massive losses for other short funds. I also want to talk about how some hedge funds are now loading up on AMC shares, so stay tuned and let's make some money. I also want to go through the massive 109% runner in the Millionaire Mindset Trading Group. This was alerted before the run happened when I took a position, and it was also alerted when I sold and when I locked in those gains. But now let's dive straight in with the key information. So, Kristen tweeted about behind the scenes fighting in high finance. This article says Millennium Management, one of the world's largest hedge fund firms, was sued on Friday by its rival Jane Street Group, which accused it of stealing a valuable in-house trading strategy after two of its traders defected. It says Jane Street said the traders Douglas and Daniel had been intimately involved in developing the strategy before resigning separately to join Millennium in February. Millennium said the theft became apparent when its profit from the strategy plunged by more than 50%, almost immediately after Douglas left. Jane Street said it built the trading strategy to take advantage of inefficient markets. So it seems now some of these hedge funds are even turning on each other, causing losses to one another. And not just causing losses to one another, but stealing trade secrets and trying to one-up each other and stealing money from other hedge funds. Hedge funds effectively make money by stealing or taking money from other hedge funds, but also from other retail investors, other market participants, other funds, institutions, and overseas investors. One of their key strategies, other than blatantly stealing trade secrets, is to sell shares while telling you to buy, and buying shares while telling you to sell. For that, I've got two perfect examples. Robert tweeted saying in the beginning, banks sell while telling you and everyone else to come in, creating bag holders. Typically at the very tippy top of the market, all of the analysts out there are telling you to buy shares of big stocks, but those stocks end up crashing. This is effectively called accumulation and distribution. These hedge funds obviously try and buy when the price is low, the price gets pushed up either by themselves or just by the market, and then comes the distribution phase where the hedge funds have to sell off their shares. These hedge funds obviously tell you to buy shares, effectively selling those shares to you just before a market crash. As I said, a perfect example of this is with Nvidia. These hedge funds were obviously loading up on Nvidia shares back in October, back in September, and back in August, down at the $200 to $300 per share range. Nvidia has since ran to $1,000 per share, where we're now currently entering or maybe just leaving that distribution phase. Over the last few months, we've seen every single analyst in the entire world giving Nvidia crazy price targets over $1,000, $1,100, $1,200 per share. This is because the hedge funds need people like us to buy the shares from them at the very tippy top before the price plummets. As I said with Nvidia, you can see it almost perfectly. Here's that accumulation zone, here's the price being pushed up, and here's that distribution zone just before the price starts plummeting. But hedge funds also do the same thing in reverse. During this accumulation zone, as the price is being pushed down to all-time lows, they're telling you to sell shares so they can load up. And interestingly enough, it seems this exact thing is currently happening with AMC. Obviously, AMC is being pushed down to all-time lows, where these hedge funds now seem to be loading up. Now, as I said at the start of the video, kavl was the stock we traded in the Millionaire Mindset Trading Group. In the morning, as the market opened, it went into a trading halt, which came up on our scanners and put it on my radar. As you can see, I alerted the group buying kavl when the stock unhalts. I then alerted the group later when it was up 40%, saying I was selling off the majority of my kavl shares and sold the final few up over 100%. So guys, if you want to be making these daily 100% gains, be sure to join the Millionaire Mindset Trading Group using the link in the description below. As Citadel tweeted, he said the bottom's in. IMC Chicago, a Chicago-based hedge fund, has sold a massive amount of AMC put options and has instead added call options. Their call position is now twice as big as their put position. Seemingly, IMC Chicago is loading up for a leg up, or for the next big move upwards in the price of AMC. You can see they sold off 486,000 puts, added 467,000 calls, leaving them with 2.3 million calls and a significantly lower number of puts. Again, this is the trick these hedge funds tried to play. The price is pushed down, they tell you to sell while they buy, then the price is pushed up and they sell while telling you to buy instead. That's what they've tried doing with AMC, pushing the price down to shake all of those paper hands out so they can accumulate and buy as many shares as possible before the price goes up. But something that is collapsing or will soon be collapsing is actually many more banks. As Citadel has tweeted, Citibank is going down. You'll know from my video the other day, Citibank has now increased and stepped up layoffs, laying off 7,000 staff members. And now Citibank's profit is also falling on severance costs from its reorganisation while its stock slides. It says Citigroup's first quarter profit fell 27% as the bank took charges related to its layoffs and reorganisation. And it's not just Citibank losing significant amounts of money with sliding profits, it's also Bank of America. As you can see, Bank of America stock is down 5% today after reporting terrible earnings. Their profits are down 18%. The Coastal Journal has said all banks continue their selling as earnings are coming in terrible. And you can see from this screenshot, pretty much every bank, or every bank on this list at least, is down on the day. These banks are continuing to take on heavy losses from the loans they've given out while rates are being increased. And as I've touched on in previous videos, this will lead to more bank collapses, more bank runs, and more trouble in the market. And speaking of trouble in the market, Jerome Powell spoke today saying that inflation is remaining sticky and that rate cuts may not be achieved this year. Jerome Powell is saying there's been a lack of progress on inflation or bringing inflation down, which is not only going to result in no rate cuts this year, but maybe even more rate hikes. Again, something I've been touching on for a few weeks now. And while we see no rate cuts and maybe even more rate hikes, it puts these banks in an even worse position again, leading to more bank collapses and more bank runs. Because more rate hikes means even more losses for these banks, and these banks will run out of capital. All of a sudden, we're going to start seeing many more margin calls left, right and centre, not just of these banks, but also of hedge funds as well. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.